Let's get to Bob Pisani. Morning, Bob.
Morning, Carl, and happy Wednesday, everybody. 3-1 advancing to declining stocks. Great open, and we're still right near the highs for the day. The usual trade movers, this time on the upside. This was the exact opposite yesterday, of course. Semis, energy, which have had a pretty downdraft, notable downdraft in the last few weeks, up today. Retail, which had a terrible day yesterday, up. Banks, tough day yesterday on the upside. Consumer staples, essentially flat at the open, but even consumer staples, the defensive sector, moving a little bit up. In other words, the point is this is a very broad advance. Even the defensive stocks are somewhat on the upside. So remember what's moving the markets, the four things that have moved the markets this year. Let's handicap that quickly. Still very positive. Fed still neutral. Consumer still strong. These are really positive data points and a main reason why we're just off of our highs. The trade outlook, I said uneasy truce yesterday. Let's just say for the moment that it's uncertain, but it's not necessarily negative right now. Global economy still very mixed. We're trying to figure out whether there's a bottom in the global economy, and we keep getting conflicting numbers. So look what we've had just recently in terms of the economic news here. China's services numbers. We're looking at services now. Beat overnight. That's good news. Their manufacturing beat earlier. European services, their numbers were better than expectations. The manufacturing numbers earlier were better than expectations. And then we had the U.S. ADP number. That was a big miss. And we had a disappointment on U.S. manufacturing earlier in the week. So you see this sort of conflicting data. We're trying to get the bottom, and we're not sure where it is. Some people have noted maybe an L bottom that we're dealing with, but not a U bottom. You know, you see, everybody's confused. The marginal mover of the market remains trade. Let me just show you what the S&P looks like in the last month, okay? So here's November 15th. You notice how the market goes up on November 15th? Administration officials say a trade deal with China was nearing, and domestic economic data was stronger, okay? Now, here, November 20th, we're moving down. The stock market moves down. Reuters reports phase one China deal may not be completed by the end of the year. Wait a minute, the opposite of what we heard a few days ago. Notice here, we have a nice upswing here. That's what's going on because there was trade optimism. Maybe we're going to have a deal. Here we have Brazil, tariffs, and yesterday, of course, the president saying maybe we won't have something until the election. Today, maybe we will have a trade deal on the upside. Does this all make you crazy? Do you feel like getting up some days and yelling at the stock market? One of my rules of broadcast journalism is don't yell at the stock market. Boy, a lot of people have been yelling at me about the stock market. We're not going to be taken in, Bob. We don't want the whole trade headlines to dominate trading every day. But it makes perfect sense. It is a marginal mover. The outcome of the trade talks are uncertain. The principals, the two principals, do not know what the outcome of the trade talks are going to be. How can we know what they are? There's a whole subset of traders who come in every day, trade intraday on headlines. This is a big headline. It's not surprising that people are trying to make money around all that. And, of course, that's the key for intraday trading. So, Carl, I know a lot of people want to yell at the stock market. I think everyone should just sort of calm down and recognize what's going on. Until we solve this puzzle, it's going to be a little bit volatile.